from another individual that I was on another project with. We got rugged real bad and came out of that with a sour taste in our mouth. But he told me to take a look at Strong Block. Great team, really good idea that they have going on. And so I stumbled on it from a referral, I guess. I come into, crypto a little bit on the newer side. I've only been into it for probably a year or so. Don't really have an IT background, but just fell in love with what I found in the crypto environment. And so when I got into Strong, I obviously coming out of a rug, which a lot of us have probably been through, had a little bit of hesitation with things. So I took a lot of time doing what I would call my due diligence and really looking at the project, looking at the team, going as far as just to look them up on LinkedIn, look at their resume. And really just found that the team behind StrongBlock had some really good experience, seemed like a team that, any one person can fail at something. But when you have a group like those individuals that come together and have a solid idea of what they want to achieve, they're going to hold each other up and they're going to make sure they're each accountable. And so I decided early on that I was just going to go, full bore on into StrongBlock, had a lot of faith in what they're doing. And, now 6-9 months later, it's obviously paid off very, very well. I kind of sat by the sidelines for my first month or so in StrongBlock, kind of learning a little bit, reading all of the chats, and then got a little bit more involved, just helping to answer some questions. And, lo and behold, before I knew it, within a couple of months, I was answering pretty much every question that came across the chats on Telegram. And from there, started getting into the node building end of it, which a year ago, I didn't know what a node was. Never written a program in my life. And here I am at the computer, midnight programming nodes and creating nodes across the other side of the world. So pretty interesting stuff. So that's, I guess, a little bit of my background. I'm from the finance industry in the real world, if you want to call it that. And so I manage millions and millions of dollars of assets for my clients out there with your traditional type assets. And I think there's a lot that's similar with crypto in the traditional finance world, but I think there's a ton of opportunity that we have in the crypto area right now that would be kind of like getting into the internet back in the 90s. I think there's a lot of similarities with that. And I think a lot of the advantages that we have, if we look back on that time frame, we can take that to our advantage.
Absolutely, and I'm actually glad you brought up that you did know what a node was, because I think that is, one of the biggest questions that we get is what is, okay, Strong is some type of business, and these nodes, I don't even know what a node is. Why would I give them my money? Would you mind kind of telling people what a node is and why it is important?
Yeah, and I think it's important to understand that because we're all here because of what we call crypto. And cryptology and cryptocurrency is what we, all come to think of, what brings us all together in all the different coins and tokens and projects that we have. All of that fundamentally comes down to what is called blockchain technology. And that is something that Satoshi Nakamoto came up with when he developed Bitcoin and came up with this just beautiful, wonderful new technology, this cryptographic way of making trustless systems that we don't need to rely on a third party to validate things. It's just done inherently within the system. And these blockchains operate and they're disseminated out into the world so that it isn't held by any one, two, or even three entities. It goes out and it is spread out across nodes. And so these nodes are simply computers, and they can be very simple small computers or a very large supercomputer. It really depends on the type of blockchain. But the blockchain is then split up between all of these nodes, and there can be hundreds of thousands of them out there that contain this blockchain information, and they confirm that the information is correct compared to the other nodes that are out there. And so if I'm doing something on the blockchain in crypto world, and I put a transaction out there to send money to someone, that individual and I don't have to agree that we're doing that transaction. There's thousands of other individuals that are looking at it at the same time, and everyone verifies that it has happened and it is written in stone in the blockchain. And the nodes are the backbone of that. So they're really the backbone of cryptocurrency, crypto technology. They're needed now, and they're going to be needed even way much more so in the future as we go forward.
And I know we've talked before a little bit about this and how it's going to go, how important it is in the future. In regards to Strong, the company, and nodes, we're on Ethereum 1.0 nodes now, and some of the questions that we get is, with the technology and the changes here in the future, everyone's concerned that they're building all these nodes on Ethereum 1.0, and what's going to happen when Ethereum 2.0 launches. Do I lose my nodes? Do they get cut in half? What's going to happen with them? Do you mind explaining, maybe, eliminate some of the fear of people losing their nodes when Ethereum goes to proof of stake?
Yeah, absolutely, Grant. And I think that's a great point and a very good thing to get your head wrapped around. It's partially to blame, I think, from the Ethereum organization, the foundation. Because essentially what they've done is they've taken an idea they had and they put it out there so people consider it two separate items. Ethereum 1, we want to get to Ethereum 2. They're two completely different things, and that's how a lot of people think of it. But that isn't actually the way that it went. What really is happening is we're looking at where we are today. Ethereum 1, we have gas prices that have been absolutely insane, where you're spending $300-400 on a transaction, congestion like you haven't seen, transactions that failed. There's obviously a scaling issue that's going on. And so they looked at that and said, how can we fix this? Because we can't have all of these DeFi projects, all of these individuals out there running to other chains. That's just not good for Ethereum. So what they did is they said, we know where we are today. We're at point A on the map. We need to get to point B. We need to get to this scalable solution that has enough throughput, has enough transactions per second, has all of the ability that we need so that it is a smoothly operating system. And they said, let's build out what we need to get to, and what is that going to look like? And so they went ahead and basically built and designed that system, keeping in mind that what they were going to eventually do is move from point A over to point B. And that's what we're going through right now, is essentially a metamorphosis of moving from the current Ethereum state over to its next iteration of Ethereum 2. And we've seen that happen. We recently had the Berlin fork, which was a number of EIPs, which are Ethereum improvement protocols, that essentially make changes to the current nodes and move them closer to being better towards ETH2. And we're going to soon come up on the London fork, which is the next big upgrade to the ETH system. That will essentially be the last step that we need to take before we're ready for what's called the merge. And the merge is where they're going to bring ETH1 and ETH2 together, combine them into one blockchain system. And at this point, it looks like what they're going to do with that merge, they're going to merge it together, and they're going to move everything into a proof of stake type system. And some people may or may not be familiar with it. The current system operates on proof of work. And that's very similar to what you hear about in the news when people talk about Elon Musk being one of them, how Bitcoin is so inefficient, it isn't green, it's destroying the planet. And there's some truth to that, absolutely. It does take computational power, so you have to put energy into the graphics cards. The miners have to do a lot of work. It creates heat. Just not really a good way of doing it. But at the time when it was designed, it was the best way, and it's done very well. But what they're transferring over to as part of this merge and part of the improvement of Ethereum is to this point of stake system where it no longer relies on expending energy and capital to do it. Capital energy, I should say.
Right.
And so really, people do not have to worry about what's going to happen to their nodes. The strong block nodes and the nodes out there in the world that are not operating on strong block are going to, over time, through simple upgrades, move closer and closer to the merge and turning into ETH2 nodes. And that will happen seamlessly for the strong block nodes. Individuals running their own nodes out in the world, they'll have to implement these updates on their computers that are nodes to get to that point, but they've been doing these upgrades regardless.
Right. So you guys don't have to worry then about the 1, 2, 10, 20 nodes that they currently have. Strong is just going to continue to go on. There's nothing that they have to do in order to keep their nodes functioning other than their monthly service fees and things like that. Is correct?
Absolutely. And I'd even take it one level further, Grant, because one of the real benefits that individuals have using StrongBlock as the protocol and the organization that's helping them to be these node providers, if there's a fundamental change even bigger than that, not just going from ETH1 to ETH2, but let's imagine that the next up and coming chain is something that's not Ethereum. Maybe something does overtake it, and maybe it's BSC, maybe it's Polkadot, maybe, whatever it happens to be. Any of these nodes that an individual has can very easily be upgraded from whatever protocol to any other protocol with literally a couple button pushes by the team doing that. And so even if there's a fundamental change or something that comes along that requires changes, that's all handled by the StrongBlock protocol for them. They don't have to worry about that. And if it's that we suddenly have more ETH nodes than we need because maybe an up-and-coming protocol becomes more prevalent than it is today and it's taking some of the market share, well, maybe 20% of those nodes can suddenly become DOT nodes or BSC nodes or Huobi nodes or whatever they have to be. That could happen very easily without really any intervention from the node operator.
Oh, wow. That's that. Yeah, we hadn't talked about that. It's pretty amazing there. There's a lot of talk about these NFTs, and I know there's a handful of people in our audience that have multiple nodes running. And, obviously, I think the biggest changes that have occurred, other than maybe the Sentinel DVPN nodes that may be coming out, and I know we're going to get to that a little bit later, are the NFTs. And, is there anything you can let people know about the NFTs, their importance? Are they, if they don't get an NFT, will they be able to continue to create the Ethereum nodes, StrongBlock nodes? Or are they going to be done with that ability to do so? Are you aware of those changes, or if there's anything that is going to prevent them from doing that?
Well, and I guess this is a great point for me to point out that I am not a official member of the team. I'm not part of StrongBlock. I really don't have any inside information into any of these type of questions or issues that we're going on with. Having said that, I probably spend a little bit more time digging into this and talking to some of the team members and trying to get this information out there. So I think I have a pretty good insight into those things, but people do need to understand that what I am saying is not official, team responses to these answers. But in response to your question, I think we need to look at it a couple different ways. One of the things that the team has done is create these NFTs. And right now, if we look at what we have on the table, we have, I think it's about 9,100 NFTs that can be staked out there, which is currently greater than the number of node operators, but it's a limited supply of these 4 metal NFTs. Those are the bronze, silver, gold, and platinum. And it only covers, because many people have more than one node, they have multiple nodes. We have close to 40,000 nodes right now. So the NFTs will only be stakeable on roughly about 20 to 25% of the nodes as it sits right now. One of the things that the team has said along the way, back in the early June video that came out probably about 3 weeks ago, David came out and said, and I put a note here, I'm just looking to see if I can find it. He said that soon you will be required to have one of our 4 metal NTFs in your wallet to create additional new nodes. And so we know at this point in time, at some point, and they've pointed to late summer, end of the year time frame, that at some point, if you want to create an additional node in a wallet, you'll need to have one of the metal NTFs in that wallet. So that much we know. But what we don't know is exactly what that means, because they're also talking about coming out with additional NTFs that you don't necessarily have to purchase. You can earn them by staking some of your strong tokens and earn them that way. And I take that as an inference that those NFTs will also then give you access into creating more nodes, which is very logical, because it would not make a lot of sense for the company to make it very exclusive where you can't do those and we can't bring on additional people to build nodes. They really want to build a more inclusive system, and we really need to, because really what we're looking at with the number of nodes that we have out there, crypto is growing at an exponential rate. It's expected to grow at well over a 30% year-over-year compound rate. And so if we look at just the next 5 years, the number of nodes needed is going to exponentially increase over that time frame. And so the demand for those is going to be there, and they're going to need new people to come in to become node operators and to do that.
Yeah, and I'm glad you brought that up, because we're starting to see a couple other competitors out there beginning, a nodes as a service, or at least on their roadmap. That's what they want to do. What do you think separates Strong from maybe the competitors in the space? I mean, I'm not necessarily aware of any significant competitors right now that are providing such a streamlined service, but I'm sure they will come. What do you think separates them right now?
Yeah, great question. I think there's a couple things in my mind that separates what StrongBlock does from the other companies. The first thing I think a person needs to understand is that competition is not a bad thing. Competition is what pushes a company to do even better, keeps them honest, and really keeps them working hard. So competition can be a good thing as long as there's enough business out there for everyone to do that. And I think just looking at the growth of the crypto industry in general, we're going to see the growth potential is absolutely there for the foreseeable future. I'd say at least the next 10 years. In crypto time, that's about 1 million years. So we're good to go for a long time on that end of it.
Right, absolutely. Right, absolutely. I'm sorry to cut you off there. I'm glad you said that, because I think Rob had said earlier before you came out, we were talking that crypto and Strong, they're to our knowledge, they're working on so many other protocols right now that even if they're around for 5 more years, it is like 1 million years or 10 more years because of how successful they've been. But I didn't mean to cut you off. I just wanted to kind of to highlight that point because it kind of reiterates something that Rob was saying a little bit earlier before you came on the longevity of this project and how he felt about it.
Yeah, I think the future is extremely bright for anyone in that industry. Now back to your question about what separates Strong from the competitors, because there are competitors. Most individuals that have done any research have heard of the company called Infura, which that's what they are. They're a node as a service company. They've been doing a phenomenal job of that. Some other individuals have brought up, and it's a very good point, AWS, which is Google or Amazon. Amazon is getting into that space and looking at launching that, and that's a great competitor. Amazon is known to be one of the biggest companies, and they're gonna be a force in that area. One of the things that I reflect on and look back on is if we look at crypto technology and blockchain technology, one of the things that it has empowered and has really come into play for the last few years is what we call DeFi, the decentralized finance. And I find that very interesting coming from the traditional centralized finance world that I operated in on a daily basis. And it's much different because in that world, you're really looking at your brick and mortar type of a company. Let's just say a JP Morgan, and they have these huge assets, properties that they have to fund and pay for in taxes. They have a workforce. They have to pay insurance. They have to pay all of these other fees. And on top of all of that, the end result is they answer to their stockholders. They have to come up with a nice profit, and they have to answer to those shareholders. And that's all of that inefficiency in between in a centralized finance world. If we look at DeFi, we're essentially taking the structure, the procedures of that centralized finance, and we're turning it into a electronical procedure that can get built into protocols. And so you can have, in a lending and borrowing situation, the same thing with a DeFi project where someone borrows money, someone lends money, but in between that spread that your bank would normally keep, where right now, literally, I went and asked my bank for a loan the other day, and they said it's going to be 9% for a personal loan, and I have one of the best credit scores out there. And they turn around and they're going to pay me 0.05% if I have a savings account or even a CD. And everything in between is basically what they're keeping for the spread, what they operate on, their margin, if you will. Well, in the DeFi world, you don't have to worry about a fraction of those inefficiencies. There is no brick and mortar. There's really no huge, 10,000 person staff to be having to, compensate and pay. And on top of that, you don't have to have that real big, hefty, thick profit margin at the end that goes off to the shareholders that they want to see on it. And so you end up with a much more lean and efficient system. And really, that's one thing that sets StrongBlock apart from the competition. They're not like AWS, where they're a for-profit type company. It's meant to be a governed protocol, and that's what it's moving towards, where there isn't a ton of profit that goes off to the company per se and pays all of the employees and for the buildings and for the infrastructure and everything else. It's much, much more efficient. And that gives StrongBlock a huge advantage against any of those traditional node as a service type companies. In addition to that, they are setting themselves apart by offering something that the other companies don't. For the most part, the other companies out there are not doing blockchain protocols across the board like Strong is building. So right now, yes, we only have ETH. We know Sentinel is coming down the road very soon. But we also know that there's at least 9 more protocols that are in the works that are going to be launching. And we're just getting the ball rolling on this. So I have a feeling that that's going to increase more and more as time goes on. And that builds in a layer of safety. Because if we were just on Ethereum, like many of the other protocols, if suddenly everyone dumps Ethereum or something happens with Ethereum, their business model is completely shot. With Strong, and if it gets built out here quickly in the next year or so with 10 different protocols, there's some inherent resiliency to that issue. And so I think the fact that it's a DeFi-built protocol as well as multi-blockchain and expanding its footprint, those give it a very unique competitive advantage across against other individuals.
Okay, and I'm glad you kind of brought up just the different company models, whether it's the brick and mortar and the fact that some places have tens of thousands of employees and things like that. Some of the question is how does Strong, the company, how do they make money? I know we pay a node startup fee of 10 Strong tokens. We pay a monthly service fee for the nodes as a service. Where is Strong? Where is Strong the company? Because I believe that anyone's going to make some type of company to make money. Where are they making money at? How are they surviving? Maybe they only have 2, 10, 20 people on their team, but how are they surviving in the space in their business?
Absolutely, yeah, and great question, because obviously they're not just doing this out of the goodness of their heart. Well, I think that's part of it. This is their job, and they're getting paid for it. And I think we all know that. And if you can't look at it and see how that's happening, then your red flags need to go up and you need to go, okay, what's going on here? It's too good to be true. So if you look at it, there's a couple ways. The first way, and unfortunately it's not part of the website anymore, it used to be, but StrongBlock really has two different divisions. There's the Node as a Service portion, which is what you and I and everyone here has been talking about, and this is our bread and butter that we've been dealing with. The other portion is their consulting side of the business, because they came along as being blockchain professionals, and that is what they've done. And that consulting side of the business, they charge and they run that separately, so they can go out and they can work with companies that are, at the point where, okay, we're ready to take our corporation, our business here, and integrate blockchain technology into it to work on the efficiencies. And they come in, they show them how to do it, they point them in the right direction, and they charge their consulting fees for all of that. Now, that business also, in my mind, likely has a very good benefit to it that they can also probably say, and as your consultants, we do have a wing of our business called, Node as a Service StrongBlock, and we can set you up with the nodes you're going to need. So I think that's kind of a neat little side benefit to that. The other thing is, if you look, and it's right on CoinGecko, if you look at the tokenomics tab on the screen there, you'll notice that there are two pools of money that are set aside. One of them is for the StrongBlock team, and then there's also StrongBlock investors. And those two pools of money are what are set aside for the individuals. On the investor side, we had Roger Ver, we had Wax, we had the Pangea individuals that brought some money into the project to fund it on the front end, to really get the node army built up, to get the ball rolling so we can get to the point we're at today where things are starting to really click. And that investment money there is great because the investors got in early and they're able to benefit that. There's also the tokens that are set aside for the team. And that is what is really going to be there, as I would call it, a pot of gold, that as they build up this project and they get this to fruition and they go from a 10 to now we're up to 20, maybe even 30 million of market cap. They get that up to 100, 200, 500 million dollars of market cap. Their $100,000 of team tokens are now, I guess, what I would call their retirement plan. And that's what they're working towards. So, they're on the same side of the table as we are. They want to see this succeed as much as you and I do. So when we're looking there and we see our strong token go from 200 to 150, I always step back a little bit and say, yeah, I'd rather see it at 200, but I know that David and Brian and Michael and Corey and everyone over on the team, those guys want to see it up at 200 as much as I do, and they're going to be doing everything they can do to get those team tokens worth as much as possible.
Right. So, I don't know if you got a chance to see it, but David and StrongBlock, they put out a tweet probably about 2 hours before we started this, and they talked about the different methods of, maybe taming inflation or what they have in the future as far as NFTs, new protocols, and things like that. Do you have any inside knowledge? And I don't believe that it was actually brought up. I know I was in the Telegram just prior to starting this and us talking, where there was some people going back and forth, worried about another happening relatively soon, based on what David had said. I didn't get that inclination. Did you feel as though he was trying to hint at something?
Yeah, I listened to it. That didn't cross my mind in the least. I guess my inclination and what I've taken out of all of the communications we've seen from the team along the way is that the primary thing that is going to drive the happenings is going to be the sustainability. And that can be looked at in a couple of ways. Primarily and definitely foremost in my mind, sustainability is that reward pool. If the reward pool starts to dwindle and we go from 300 tokens in the pool down to 200, now we're giving them away and now we're down to 100, the writing's on the wall at that point, and something needs to change quick. And you need to really, because if you run out of tokens, you're in a really bad situation. So I've been watching the reward pool. You can actually look at it on the blockchain and you can see what is happening with it. And I track that, and I sent you a chart of it. I don't know if you're able to share it with people on the call or not, But that chart, if we look at it, has gotten very stable over the last 6 months. It's really hovered anywhere from about 200 on the high end down to 175,000 tokens in the reward pool at any given time. And for the last 3 months, it's really hovered right around that 170.
Okay, and I
And
just
that's
I just
important
posted that
because,
reward pool in the waiting room for everybody to see, and it's in the waiting room because not everyone's a member here, so you can kind of see
yep.
the reward pool, what he's talking about. I'm sorry to cut you off.
Yeah, and that's important, and that's really what the team, David leading it up as well as the other individuals, they really started working on this project back in, early 2018. And one of the things that is key and pivotal to any project out there is getting the tokenomics correct. And there's always trials and tribulations, and there's always, people that say you should have done it this way, you should have done it that way. I think they've done a very good job. They started out with a number that was very large, and they took their time, figured out where it would need to be. Last fall at some point, they went through a burn when they figured out, okay, we have the tokenomics figured out. We know really what's going to be best for the growth of the company. And they did a burn, and they got it down to a little over 500,000 tokens. And since then, they've been tweaking things. Part of what they tweak is the reward payout on the nodes. They look at that, and they have to look at how much money is coming in from node creation. And they have to make adjustments periodically to make sure that everything is going to be, at a reasonable level. And I think they've hit that level. So in my mind, I think that it's probably good to stay for a while, but it really is going to depend on how that adjusts. So if people are curious and wondering about that, what I'd recommend you do is go out, ask me on the, Telegram, ask Grant, I'll give him the info, and we can show you which wallet to look for at what that reward pool looks like, so you can keep your eye on it, see if it's growing or if it's shrinking. That's probably the best way that you're going to know when a halvening might come. Now, there's other factors that go into when they do a halvening, and I wrote down here what they were just so I would have it, because the team has an official, response to that, if I can find it. Yeah, so its reward calculations are based on many factors, including the number of nodes, the node health, node revenue, token price, NFT node ownership. Rewards are variable and they're not guaranteed. So as you can tell, there's several factors that go into that. But in my mind, the number one is the sustainability of the rewards pool. The other one would be the price of the token. And the reason I think that's important is not that the price of the token sets when the adjustment is going to happen, but they have to monitor the price of the token. They can't do a halvening if the sentiment in the crypto world in general is not very good. Frail. That would be a terrible time to do a halvening, because at that point in time, you might have a whole bunch of investors that have shaky knees and they sell their tokens, which drop the token price down even more. So the timing of when they do the adjustments based on price and sentiment absolutely factor into it, but I think that's a secondary input in that calculation.
Yeah, excellent. I think obviously I would love for you to be right, but I do think that you are right in the fact that you got to take all those things into consideration. And I've noticed that the price for Strong has really just been hovering between the 120, 160 mark, and it's almost like it's its own ecosystem. It's not necessarily doesn't seem to be following the market sentiment, right? Where you have Bitcoin going down. Well, Strong is going up, or you have Ethereum going down. Strong is going up. Would you equate that to just the need for nodes as a service, or would you equate that to the bullishness of this community and the potential, or not the potential, but the dropping of the Sentinel nodes? Or what makes you, what do you think is happening between those dynamics? Because typically, as we see in the crypto market, everything follows Bitcoin, or 99.8% of the tokens out there follow Bitcoin. But Strong, it seems like it's on a different path.
Well, I'll start out by telling you what I don't think it is, because I've heard people say that they think they know what it is and what's causing it. And I think we have proof that that is not the case, especially with this last pullback. There have been a number of individuals that have come out and vocalized that it's not going down because gas prices are so high. People aren't claiming their rewards and selling them because the cost is too high, so you're inherently just hanging on to them. And we've heard a lot of that, and that made some sense in that view of it based on where we were at when we were at $300-400 transactions. Yeah, I'm not going to claim some rewards because I'm going to pay $2,000 to get them out of my nodes to then sell them at a low price. So that made sense. But if we fast forward to where we've been down to literally, I've seen 4 GUI on the gas price in the last couple of days. I mean, we've been hovering around 10 or 15, which those gas prices are, if anything, probably on the low end of where the last year in general. And with this last pullback, you could no longer blame it on the gas prices. Gas prices have been inexpensive. If a person had shaky knees and they wanted to sell their rewards and get out of them, they could have done that during the recent pullback. And to your point, that did not happen. If anything, we held up even better than we have in the past. So I don't think that's the reason. In my mind, I think what happens, and I see this from my clients in the real world, is a person can take a fundamental shift and look at their investment a little bit differently. You could buy a no-name, let's just say shitcoin that's out there, and buy that coin looking for a quick flip, some profit, some money. You want to make it. You have no investment. You don't know much about it. It's just it doesn't mean much to you. Your risk is inherently higher, and when things don't look so good, you want to get out of that because you just don't have a lot of individuals, and I think most of the individuals that are strong holders, buyers, and sellers of the token are more invested than that. They've taken time. They probably own nodes. They're probably not just someone buying a coin they've never heard of. And they know the future value of that. They have faith in it. They look at it and not say, this coin is worth $150. They look at it and say, these 10 coins are worth a node. And that node's going to be useful in 5 years. It's going to be very useful in 5 years. And they don't worry about the day-to-day ups and downs of the value. That's my take on it.
Okay, nice. You know, one of the questions that we got, and we actually, you know, the team here at Crypts and Errors were kind of looking into it, was how do we know that that we actually own these nodes, or that we're actually running nodes, and Strong's not just taking our tokens and our money. You know, is there a way we can look it up, or can you explain? Because, you know, back in I believe the beginning of June, you know, Ethereum had about 5,400 nodes. If you looked at Etherscan, but you know, StrongBlock is telling you that now we're at what, nearly 40,000, or maybe we're over it now. Where are these nodes, and how do we know that we're actually running them?
Yeah, great question, and I think that came up because ETHstats.org, which is the entity you can go to and quickly tell how many nodes are out there running on Ethereum, is very well known. I think there's a lot of people that just knowing how many nodes are out there, and they say, well, wait a minute, we have 20,000 nodes and there's only 8,000 nodes running on Ethereum. Something doesn't add up, and it you know, catches people by surprise, and you don't know how to get the answer to that. So the real answer on the Ethereum end of it is a number of things. One, the main net that runs Ethereum is the active net. That's where you go when you want to place transactions. You want to do current and real world things with the node. A lot of the clients that end up needing node services, your node as a service clients, are looking at things a little bit differently. They are designing a DApp. They are building an app for their website. They're integrating in for something else. Or maybe they're a bank like JP Morgan that is going to move their banking services onto the blockchain, and they're going to start doing that because it's way more efficient than using the old internet technology. But for security reasons, they don't want that information out on the main blockchain. Plus, it doesn't need to interact with it. So when we look at Ethereum, there's the main net, which is the smallest number of nodes, There's a number of test nets for the research and development side of things. And then there's multitudes of private blockchains out there that those individuals, not only do they not need it on the public blockchain, they don't want it anywhere near the public blockchain. And so there are many of those out there, and a very small amount. Right now it's around 5,000 of the mainnet nodes. So in Ethereum, very, very explainable. Now that will probably change quite a bit as time goes on. ETH2 is much less resource intensive than ETH1. And right now there are roughly about 170,000 validators running on the ETH2 network. So we're going to see, as things progress forward here, we're going to see that the number of nodes and validators in general jumps up. I think the takeaway from that is just getting a glimpse into what is out there for just the regular, what's going to be mainnet ETH2 nodes, gives you a representative idea of how many are out there. There's 160,000 that are out there and running, and that gives you a better idea that maybe our 30 or 50,000 isn't that big in comparison.
Yeah, and that was one of I think the biggest takeaways that I had. When the question was first asked in our Discord channel, I think it took some of us, by surprise, because maybe we thought about it, but we didn't really think about it. And then when you and I had spoke about it and you explained it, it makes you feel a lot more comfortable, because I think it goes back to that trust factor and doing your due diligence in wanting to invest in Strong or any company, right, or any business. And when you get an explanation like that and you get a little bit further understanding, I think that's so important. Maybe even for people who don't have nodes now that were a little skeptical on it. That understanding that there are so many nodes that maybe we just don't see is a huge thing. Speaking of,
I was going to say, and on that note, just one last little point. I think people should maybe look at things how they are. We're looking at the world, and a fraction of a percent really in the world only deals with cryptocurrency. It is such a small part of things. If we look at the internet in general, the vast majority of the world has access to the internet. So the disparity between those two is just absolutely enormous. And really what blockchain technology is it's internet 3.0 in my mind. It really takes it to a whole nother level. The trustless, decentralized way that blockchain works takes it to a absolute another level. Cryptocurrency and what we're dealing with today is 10 years from now, we're going to look back, and what we're dealing with and what we think the capabilities that are going to look like Tonka toys. It's going to look like nothing. There's ways of using blockchain technology, and there are uses of it that we have not even thought yet that are going to be absolutely pivotal. At some point, you're going to find that we have these nodes out there right now, and I spent hours programming nodes for StrongBlock. Now StrongBlock can build them. If you did it yourself, it would still take a couple hours. They, automate it to get it down to a small process, but it's still a hefty, big computer, a VPS that's being rented, and it does a lot of work. Well, in a few years, what you're going to find is that your phone is going to be able to be a node and run as a node 24/7. Your iWatch is probably going to end up being a node. Nodes are going to be essentially almost everywhere, and that is going to just expand the decentralized nature of it and just reinforce the security and the advantages of it. And I think looking back in 10 years, people are going to be just in awe at how far the node and the distributed ledger world have come.
Yeah, I almost equate, especially how early we are in nodes and even Strong and just the profitability of it right now, to when Bitcoin first started, 2009, right? You've got in Bitcoin in 2009 and you have it now. You're really wealthy, right? And you're right. 10 years from now, I kind of feel the same way about nodes and nodes as a service. We're in it in the very beginning, and of all these technology and capabilities in the future, these early adopters may be the rich ones in 10 years or so.
Oh, absolutely. Yeah. We're at the point where you're buying, Amazon for $2 or $3. I mean, that's where we're at in blockchain technology, in my opinion. I think absolutely all of us are in extremely early. I laugh when I see people come into our Discord or into our Telegram channel and say, "Gosh, I wish I'd gotten here early." You are early. You weren't, uber early, but you're really early.
Well, speaking of early, Sentinel and DVPN protocols should be coming out here, hopefully in the next, I believe there was a tweet out there, maybe the 25th of June, there's supposed to be something happening with Sentinel DVPN, so maybe sometime shortly after that, we can start making nodes for DVPN. Do you have any information that you can kind of sneak out about maybe, the creation of it, the token amount, the reward amount? Do you know anything about those DVPN Sentinel nodes?
Well, I can tell you what my opinion is and what I feel is going to happen. Not any inside information, nothing from the team, but I think just knowing how the tokenomics, the inflation of the token and what we need to happen, I think we'll see Sentinel come out with the 10 strong contribution, same as we have with the ETH nodes. They've said that the rewards are going to be payable not only in Strong, but also in Sentinel or DVPN, the native token. I don't quite know what to expect on the mix of how much of each of those tokens, but I'm extremely bullish on the fact that not only Sentinel, but the future tokens that'll be coming out will be doing that. And the reason for that is right now, with everything being paid reward-wise in Strong, for anyone to take a profit or pay any type of fee or anything, they need to essentially create a sell order, which creates some downward pressure on the Strong token. By having the dichotomy of this two-token payout reward system, a person will be able to hodl their Strong, hang on to it because we know it's going to appreciate. We feel very faithful in that. We also want to hang on to it because we're going into a governance world, and your tokens are going to help you on the governance end of it. But you're going to get paid in these other tokens where you can sell those, take some of your profits, pay your fees, do what you need to do, and it's not going to create that downward sell pressure like it does on the token currently. So yeah, I think we're going to see a cost similar to what we have right now with the ETH nodes of 10 tokens. And then we'll see two different reward tokens coming out. I don't have a real, firm grasp on where I think it's going to be proportionally, but I would think it'd be more.
I think we might have lost you there, Lex. I don't know if your headset went out.
Oh, are you there?
Yep, there you are. You're back.
Oh, sorry about that. I don't know where you lost me.
You were just finishing up that the combination in rewards in DVPN and Strong. You're kind of finishing up there.
Yeah, I guess I think it's going to probably be 10 tokens of Strong to get into the Sentinel nodes. Probably the additional protocols that come out after that, and then some combination of Strong and DVPN. Probably more Strong and a smaller amount of DVPN, but that's just my take on it.
Okay, and so right now, if the people that are in, there's a limit, a 200 nodes per wallet limit. How do you foresee that actually working out? Is there going to be some way to track that you have now DVPN nodes as well? Is that where you get the 200? Or I know we talked, and I know there's a reason why there's 200, like at least a cap for the per wallet. So maybe we can go into that. And then does that 200 nodes per wallet affect the new protocols?
Yeah, good question. And I don't have the answer to that. So from my understanding and the research I've done, and from the team, but from helping individuals that did run into some issues that had many, many nodes in a wallet, a couple upgrades ago on the ETH network, we were running into issues where there was a maximum amount of gas that you could expend in a transaction. And when you add node after node, those are all interactions. And so if you had 100 nodes on a contract interaction, your total gas spent would sometimes hit the cap, and you would no longer be able to do a pay all fees or do a claim all rewards, and you'd be stuck to claiming 100 individual nodes in the wallet. Now, what we've seen over the last couple of upgrades is they've increased that gas limit, and it seems like 200 nodes is probably safely within that limit. So I think that is why the team put that limit on it, is because of the limits of Ethereum. Whether we can combine different types of nodes in the same wallet, I think really depends, because currently all of the ETH nodes that we've purchased in Interact, those interactions happen on the ETH network, and they have said that they've built all of these bridges so that we can start using other more cost-effective chains to interact with different parts of the protocol. So I'm not really willing to step out and say I think it's going to be one way or the other. I think that part of it's going to be what happens with ETH gas. If ETH gas stays where it's at, and we're getting close to the London fork and the merge and move to proof of stake, the gas problem just disappears, and then ETH is going to remain king of the hill. And why would we move it? If things change and we go back to $300-$400 transactions, whole nother story. Maybe we're looking at a different outcome.
Right. And I'm glad we're talking about wallets. And I know when we initially talked about a week or two ago, and I think some of the community members here know, I was a little vocal about maybe these MetaMask wallets being compromised. Do you see something in the future, or do you see a security issue with having or using something like MetaMask, and there's no way for two-factor authentication or a way to transfer these nodes to maybe a wallet that wasn't compromised? Or is there maybe in the future a way that we don't want nodes anymore and we want to sell them to somebody, where we can sell the nodes to somebody? Do you foresee, one, obviously that the first thing is the security issue, but then two, maybe transferring nodes to a family member, a friend, or sell it to somebody?
Yeah, great question. And I don't have an official answer. I haven't really gotten any guidance from the team on this one. We did have node portability, or migration as we called it, for a very short time period, maybe a day, back probably before Christmas or maybe right after Christmas. I'd have to look at the calendar. But it stopped, and I believe if what I remember correctly is it was a technical issue. Something was happening and wasn't working right. And so they had to turn it off. Now, I don't know if it's a technical issue. I don't know if having nodes have a resale value is an issue because of different rules and regulations around the world, probably specifically the United States here. So there's multiple factors that could play into that. To your point, I think there is an issue, because as we sit right now, once the node is created, there's no moving it. And if your wallet is compromised, then you essentially have lost the wallet. I've helped numerous individuals, I'd say at least a dozen at this point, that have had that happen. And in some cases, they'll move $20 onto the wallet to pay a node fee, and within about 2 seconds of the money hitting the wallet, a bot automatically sweeps that money off into some scammer's wallet somewhere else. And about a month later, they haven't paid their fees, and they have no node. And that, in my mind, is not real acceptable. We need to figure out a solution for that. So I for an individual that has a compromised wallet and has nodes in that situation, I don't have good news. I don't know if there's a way that we're going to be able to solve that. It is something that I do want to talk with, David, and see if there's a way we can work it out. But I wouldn't hold my breath at this point, because it hasn't happened over the last 6 months. On a positive front, I did order and got in on Monday my Ledger, my first hardware wallet. I finally just gave in and did it. And after pulling out half my hair and staying up way too late several nights, I believe, knock on wood, I have all of my 30 wallets moved over to my Ledger hardware wallet and able to interact. I'm about 99% sure that I got everything there. It wasn't easy. It was a pain to get it all to work, but for those individuals that maybe do have nodes on wallets and they are concerned and they think they want to make sure that they're safe, I think there may be a solution out there. I just need to put a few more touches on, test mine out, make sure everything works perfectly before I go deleting my MetaMask seed off of my computer and basically just working from the hardware wallet to make sure it works. So I think there is, that benefit for those individuals that want to make sure they're secure.
And do you think that, something obviously maybe we can follow up in the future and, at least our members, our subscribers here, will be able to try to walk them through something like that? Because I know, at least one person here that's listening to us has a compromised wallet and would be interested in, at least migrating their new nodes and if at all possible, their compromised nodes to this to a ledger. You think that would be something maybe a week, 2 weeks, or however long it takes you to figure out if you're secure? We can come back and walk people through.
Yeah, absolutely. That two things that I'm definitely going to work on. One is figuring out and making sure that I figured out how to get existing nodes that are in a normal wallet onto that ledger, coming up with either a Medium or a combination of a Medium article as well as a Loom video for individuals. The other thing is really trying to talk to David and the team and seeing if there's a way we can come up with a way of, having some of those, at least the nodes that have been compromised, moved into a safe wallet, or potentially just node migration coming back all together.
Excellent. Well, I know we're wrapping up here on this hour of your time, and we really appreciate that. Is there anything that you would add now with DVPN coming out? You think and Strong just chugging away at around 150, 160. What are we at? 165 right now. Do you recommend? Would it be your recommendation to stay the course, keep building Ethereum strong nodes, and then just to keep going? Build DVPN, build these new protocols coming out. I mean, is there anything that you'd be able to?
If I had the answer to that, Grant, that's the $1 million question. I'm sitting on that one myself. I have a bunch of rewards built up, and I'm sitting there going, do I build ETH nodes? Do I wait for Sentinel, or do I go for NFTs? And about every 30 minutes, my opinion changes on it. I don't know. I guess what's worked well for me throughout life, as well as in crypto, is hedging my bets and not putting all my eggs in one basket and doing a little bit of each. And I think that has served me well throughout time. I have a lot of nodes. I have a fair number of bronze NFTs, so I think I'm going to do a little bit and save some for Sentinel, and I'm going to do some into the newer metals, and just make sure that I'm not putting all my eggs in one basket.
No, I had to ask. It's always a no if you don't ask, right? So we got to ask because you never know what you're going to get. We do have.
Ask me in a month, and I'll know exactly what I should have done.
Yeah, right. Exactly. Shoulda, coulda, and woulda, right?
Yep.
Obviously, like I said, we're wrapping up here on this hour. Would you mind sticking around maybe for some community questions, or if there's anything else that I didn't ask you that you think that the community should know? If you share it with us, that would be awesome.
Yeah, no, I think really just, if you're new to crypto, take the security end of it seriously. If you can create your nodes and do your other crypto trading and everything else on a hardware wallet, just from my experience dealing with people that have run into issues, it's worth the $50 or $100 you spend on the wallet. Just go and do it and get it going. StrongBlock, I think, is a great opportunity. I'm not part of the team. I don't get paid anything for doing what I do with them. Do your own research, but I think definitely take a good, no pun intended, strong look into it. I think it's a great opportunity. I think Sentinel coming down the road is another phenomenal opportunity. Getting a node will help you build up some DVPN tokens, and I think that's a great project as well. So just very bullish on the project as well as crypto in general.
Awesome. And we do. I did get one question during this in text, and I may have. I don't know if I'll be able to translate it correctly if the way they want to. But the question is going to read. I'm just going to read it like this: if we're able to stake about approximately 25% of the nodes, could we possibly share nodes with others or share the rewards?
Well, Well, I guess one thing that has been discussed and the team mentioned along the way, and one of the things we have to think about is, if the token price of Strong increases and we're up to $1,000, $2,000, $3,000 a token, which sounds crazy right now, but look at Compound, look at some of these other ones that went up to 40,000. You're looking at an astronomical cost for these nodes. One of the things that the team did talk about is if that comes into play and we get to that problem, if you want to call it that, is how do we deal with that? And fractional ownership is one of the things that came up. So that is essentially what they were kind of talking about, is fractional ownership and rewards coming out of the node. And so the team has mentioned that. They could also adjust the price of the nodes as well. And so maybe that is an option. But in my mind, that kind of messes with the tokenomics end of it a little bit as well, because if you lower the price of the node, then the rewards should kind of come down. So yeah, I think it's possible. I think that's something that might be looked into, and hopefully we get to the point where we need to address that.
Awesome. And before we take any more questions, Rob, did you have anything for Lex?
Man, I just want to say I've been sitting here listening to this, guys, and I learned so much. Lex, I really appreciate you coming down and spending this time with us and our community, and just really laying down some really good questions. Grant, you did a fantastic job too. I just really appreciate you guys both enlightening us and really, wow, I learned so much, man. And then when you said $1,000, $2,000 strong price, I mean, if we get to, $150 million to, $200 million market cap for strong, you're in that, $1,200, $1,300 a token range. And so as they bring on new protocols and as we grow over the next 1 to 2 years, I mean, the sky's the limit in my mind. You have such a solid team. David is such an intelligent guy, and he's got, just an all-star team. And, you have people like Lex here out in front, enlightening the community. And I'm just so thankful to be in part of this. And I appreciate you guys. You guys did a great job. Thank you.
Well, and I appreciate you guys having me on to do this. I'm passionate about this. I found my new love, if you will. This is kind of my, my full-time hobby. My job is, much smaller part of my life now because I'm just so involved in this. But yeah, I appreciate you guys bringing me on, letting me really kind of talk about what I'm passionate about, and it's a great, great opportunity.
Thanks, Lex. I really appreciate it, and we do have at least one question right now, if you're willing to stick around.
Yep.
Hey guys, just wanted to thank you guys again for holding this podcast. Alex, in regards to, I mean, I know you touched upon security a bit, but I wanted to get a little more information on what a compromised node looks like and how that could affect our wallets.
Sure, yeah. And really, when I talk about being compromised, I'm referring more to the wallet per se. The node and the wallet really have no connection other than it's connected in regards to where they're going to pay your rewards. So if a node were to get infected, like any other computer, that could happen. And you could get a virus in a node, the VPS unit that's located in, Singapore or Japan or wherever it has to be. That would in no way impact your wallet whatsoever. There's no control over it. What I'm referring to, though, is, and what it generally comes down to is, unfortunately, new people into the crypto world that don't understand the implication of the seed phrase being let out. As we all know, there's tons of scammers out there, and they'll pop in on Discord or on Telegram, and they'll give you a DM, and they'll say, hey, we're customer support. You just asked a question. You have a problem. We're going to help you solve that. You need to just connect your wallet to this site right here. Just enter your seed phrase, and then we'll be able to help you. And unfortunately, people fall for that. And as we all know, your seed phrase, which MetaMask, thank God, just started calling your secret phrase, which hopefully helps people understand that it's important. It's your secret, it's your key to the kingdom, if you will. And if you give up that seed phrase, the assets in that account are no longer yours. Any tokens in there. Now, with normal Bitcoin, Ethereum, DOT, whatever wallet, you're safe. Nodes, unfortunately, as of right now, are not able to be moved. So you have no recourse in that. And what these scammers do is they set up this bot on your wallet, and the instant you deposit anything into that wallet, you basically lose it. It just instantly goes out to the scammer's wallet. So if you log on, you click on the claim button, 30 tokens hit your wallet, 2 seconds later they go off to the scammer and you have no tokens. Does that answer your question?
Yes, it does. Second part to the question, um, the I guess I'm looking for the best recourse to avoid any types of hacking. So currently, I have a VPN. I'm using Brave. I don't have many services connected to my wallet besides the essential ones. What else would you suggest beside getting a cold wallet?
Sure, and yes, several levels of that, and some of them are on the extreme, some of them are just on the good practice end of it. So if we look at the extreme end of it, which I would say goes beyond a cold wallet, well, a cold wallet is really the number one. Have that hardware cold wallet that seed never sees the real world unless you physically give it to someone. There's nothing they can do about it. That's the best way. You have to be careful, though, because you use your computer in multiple ways. You go out to different websites, you visit different things, you download, you click on links, you do all of these things. Most individuals end up using something like a Trust wallet or a MetaMask extension wallet or a wallet that is not necessarily separated from the real world. And so you can download a virus that's a screen scraper. So you set up your MetaMask wallet and you see your 12 keywords there, you write them down on a piece of paper. Well, that scammer's program scraped your screen and took a picture of it as soon as it knew that MetaMask opened up, and you don't know it, but your wallet's compromised. They wait for you to load it up with $100,000 worth of tokens, and someday all your tokens disappear, and you're like, there's no way it ever could have disappeared. I've never shared anything. Nothing ever happened. You didn't realize it happened 4 months ago, and they scraped your screen, and then they disappeared and waited for you to load up the wallet. And it's all on the public blockchain, so they can sit there and watch your wallet and go, hey, this guy's up to 20,000, 30, 80, 90, 100. Okay, hit the button. Let's steal it. So a lot of people, and I think it's a good course of action, especially if you're going to be building up a number of nodes, 20, 40, 100, even more nodes in it. At that point in time, might not be a bad idea to buy yourself a dedicated computer, and all you use that for is for placing your trades. You don't go on Telegram, you don't go on Discord, you don't go on websites. That's all you use it for. You're not going to be downloading any viruses or anything like that. You use your other laptop for doing all of your normal daily stuff and doing what we're doing right now. So that would be another step. And if you have 100 nodes, a $200-300 computer is probably a great investment along with a hardware wallet, and I'd say that's well worth its weight in gold.
Oh yeah, that answers my question. Thank you. I appreciate it.
Thank you. No, thank you. Appreciate the question.
Thanks, guys.
Yeah, I just wanted to add a little bit to the to that question regarding security, and specifically with MetaMask. If you go into your settings with MetaMask and look at your contacts, unless you've added contacts in there, there shouldn't be any in there. And one of those, part of that scam that happens where these bots are set up, it's those contacts, or potentially could be the contacts that are in there, that it literally just sends all of your wallet to. So it wouldn't hurt to go and clear out your contacts. I'm not saying just because you have contacts in there that you're compromised, because I have actually sold things back to Uniswap or PancakeSwap, and I've seen contact addresses saved in there. I don't think that I'm compromised at the moment, but they do get saved in the MetaMask for some reason. So I would just clear those out. That's just another method of safety.
Yeah, great point, Grant. And on that note, Laura Chin did a really good interview with gentleman that really came up with MetaMask and is the founder of the company. And this is probably 2-3 months ago. Really neat interview. And one of the things people probably noticed is MetaMask now offers swapping directly on the app where you don't have to go off to Uniswap or something else. One of the things that has done is it's created a lot of trade revenue. They were actually able to go out and hire individuals, hire teams, and really start working on new initiatives. On the podcast, they talked about how probably by the end of the year, we're going to see not only multi-chain capability built into it, where you won't have to kind of manually add BSC network and all these others. It's going to be really a more built-in function, and you can do any chain out there. It's really going to become a more multi-use wallet. But we're also going to see things like 2FA, two-factor authentication built in, multi-sig capability, and other security things that, frankly, all of us have just been screaming for with MetaMask, because everyone allows MetaMask. It works. It's great. But the security end of it's just been a little bit lacking, and it looks like by year end we'll probably have those things.
Yeah, I think that would be great, especially like you said before, getting that dedicated computer or and a hard wallet. When you have so many nodes and at the current prices, what I just said, it was $165, and you're bringing in $6,000, $7,000, $8,000, $9,000 a month. Maybe for some people that's not a lot. For me, it's quite significant. And I think for most people that would be quite significant. Spending $300, $500 on something dedicated is just a great way to secure that passive income. It's something that I'm going to look to do as I start to obviously acquire more nodes and get more passive income coming in. It's just, to me, the smart thing to do. So thanks for bringing that up. That is a really great idea.
Well, and who doesn't want to go and flash their Ledger X in front of their real world friends anyway? What's cooler than that?
Right. Well, maybe a new car, right?
Yeah, I'm going to have to do that. Yeah.
Hey, well, look, we really do appreciate you coming out and spending a little over an hour with us. We put it out in the Telegram, put it on Twitter. I know that we've kind of discussed that David Moss is going to send out 10 Strong in a giveaway to our community members, to our subscribers. So we've already taken a snapshot on our end of who has been in this AMA with you, and we will work with you on getting that over to whoever that winner will be, probably announced at some point this weekend. And just to kind of end things out, for those of you who are subscribers here with the Cryptonaires Discord, and those of you who are not, this is the first podcast that we've ever done. I think it's one of the most important podcasts that we've ever done, simply because we kind of started our journey together here, or that are almost basically centered around Strong. Crypto Sensei Rob has it enlightened a vast majority of this community about Strong, people that didn't know anything about it, including myself. And now we're going down the road of passive income, hopefully for 5, 10, or maybe the rest of our lives. And it's quite significant, and we're very, very grateful for someone with the knowledge that you have, Lex, and your ability to speak so passionately and educated on crypto and Strong. It's really important to us, and we hope to continue to bring other experts in this field that are as knowledgeable as you are. We do have another individual that's going to be coming on beginning of July to talk about Flare and the Flare network, so I think that's going to be really exciting. And we're also working on setting up a podcast with one of our moderators, or actually a couple of our moderators, some of them are in here, are women, and we think women in the crypto space are very important, so we want to try to get a ladies' night podcast going to talk about crypto and how it affects them. So we're really excited about that. I know, Rob, if you have anything you want to add before we head out.
Yeah, and I mean, if you guys found value here and you guys wanted to sign up, you guys could just go to cryptonaires.com, and we have a half-off deal right now for the first month. We'd love to have you in our community as we grow. Thanks, guys.
Thank you, guys. And Lex, any parting words, any words of wisdom or advice for us before we close everything out?
Be curious, break shit. That's where innovation comes from. So just get crazy and get out there and do it, and take a leap of faith. And crypto's amazing. So yeah, just be curious.
All right. Well, thank you so much. We really appreciate it.
Thank you guys.